All right, if you think you'd enjoy it. You better get Mrs. Danvers to help you, hadn't you?
No, I don't need Mrs. Danvers to help me. I can do it myself.
All right, my sweet.
Thank you, darling. Thank you. Well, what'll you go as?
Oh, I never dress up. That's the one privilege I claim as the host. What will you be, Alice in Wonderland with that ribbon around your hair?
No, I won't tell you. I'll design a costume all by myself and give you the surprise of your life.
If you love listening to this show, please consider giving a rating and a review on Amazon Alexa or wherever you listen. We want to continue bringing you this amazing content, and part of our ability to do that means that we need a big audience. Now, it may not seem like much, but rating and reviewing the show will help more people find us, just like how you found this show. Simply on any podcast platform, search for a show, scroll down to the bottom, and push 5 stars. It's that easy. Thanks for supporting the show. Today, I'm joined by Paul Mellotto, who is the CEO of AlRaedah Finance. Welcome to the show today.
Thank you, Scott. Thank you for having me.
Now, you have headed general capital markets and mortgage accounting previously, and I wonder if you could tell us a little bit about that experience.
Yeah, back in early 2000, I would join a company called MortgageIT. It was a home finance company located and based in New York City. We had about 3,000 employees when we were acquired by Deutsche Bank in 2007, right at the beginning of the financial crisis. At that point in time, we were funding close to, I think, $35 billion worth of mortgages and over 75,000 units. That was the start of my career. And then we moved over to Deutsche Bank as part of the acquisition. They acquired us. MortgageIT was a publicly traded company as a mortgage REIT, which was back in fashion back then. And when they acquired us, we took over residential mortgage-backed securities at Deutsche Bank during the height of the crisis. And I was doing a lot of securitization work at that point in time. And all of this obviously is conventional type of financing. And while we were at Deutsche Bank, we were looking at different projects around the globe in regards to mortgages. We did some research in the UAE market, the Greek market, and Saudi market, and we ended up opening one of the first Sharia compliant home finance companies in Saudi Arabia through a joint venture with the AlRaedah family and Deutsche Bank. And so I joined there as the CFO. About 2009, I moved myself and my family over to Riyadh and started the journey into Sharia compliant financing, which was a little different than what we were used to in the U.S. Even though the U.S. has Sharia compliant financing companies currently, Sharia compliant financing at the time for me was very new. And it was just a learning experience to where we needed to go and how we got there.
Well, as I'm listening, it's incredible because you literally have lived through major sets of history that I think many of us, and certainly our future generation, are going to be reading about. I mean, the mortgage crisis, 2008, some of these things were incredibly massive, and you were very much at the heart of it in terms of, like you said, securitization, the collateralized, debt instruments and so forth around mortgage products. But it's interesting because it's, I think certainly we now kind of retrospectively know about some of the challenges, but we've also hopefully learned from that as well. And I think the area that's really intriguing is this transition to Sharia compliant finance. And for those that are listening that are not familiar with Islamic finance, maybe you could just give us a quick kind of a primer.
Yeah, very, very interestingly, it's very similar and very different than conventional financing in a few ways. And then we could actually walk back to the securitization and why I believe Sharia compliant financing actually is a much safer credit class than a normal securitization type of structure. There's many forms of Sharia compliant financing, but the two most prevalent forms that we use today is something called Ijara finance, an Ijara lease finance, and a Murabaha type of finance. And what all of that means is that when you create a Sharia compliant financing structure, there has to be a real asset or a real service behind it. And when I say a real asset or a real service, I'll give you an example. From a mortgage business, when we're running a mortgage business under Sharia compliant terms where we issue Ijara leases, the finance company or the financier would buy the property on behalf of the customer and then lease it back to the customer at a fixed rental cost. And after the fixed rental cost is completely paid, they would own the property. So the ownership still belongs to the bank until the lease is paid off. When you look at a conventional type of mortgage, the conventional type of mortgage is in your name or my name, and then there's a lien put on the property. And what happened and what you saw in 2008, 2007, and 2008 is the layering of risk with securitizations, because the first securitization done with the pool of homes per se, would ultimately then be broken up into multiple or many different securitizations using the same asset multiple times. From a Sharia compliant perspective or Islamic finance perspective, that's not allowed. So that asset would actually have to move from one securitization to the next securitization, which would mean the first securitization would need to be paid off. So you wouldn't have the same house multiplied 10 times.
Yeah, it's really, really interesting because there are certainly, the kind of clear benefits that you are articulating, but there's also other aspects as well in terms of transparency. The fact that, because you don't have these layers of collateralization and different pools, you can actually have a more direct connection to the risk and the asset, which means that the holder is going to make more rational decisions, right? And certainly the leverage that you talked about is incredibly important. We've seen too many cases, not just in the mortgage security product category, but other categories where people have taken way too much leverage than they should. And it becomes very speculative, whereas I think what you're talking about from an Islamic finance is that it's very much grounded on kind of fundamental, just good business decision. Is that right?
Yeah, and I think it's very simple and transparent, as you said, and I think there's a more shared risk aspect to it, right? The Islamic finance is more of a shared risk approach versus one person getting the upper hand on another person in regards to different types of collateralized or conventional type of financing.
Now, I want to transition to talk about your current organization, AlRaedah Finance. You guys are a principal financing institution when it comes to SMEs in the Kingdom of Saudi Arabia, and specifically working with entrepreneurs, small businesses, and SMEs. Can you talk about your focus and why you guys have become such a key leader within this segment?
You may also like our quarterly Astor Perkins event that brings some of the most notable experts and category-leading startups in their area of sustainability and human survival on Earth and in space. To register, visit astorperkins.com/events.
Yeah, I think a long time ago when we started this, the plan was to support these SMEs. And SMEs are very different than any other type of financing. Each one has its own distinct problem they're trying to solve, and everyone does not fit into one particular category. If you look at a mortgage loan, if you look at a car loan, everyone sort of fits within a certain segment of, this is how much salary I make, this is how much I can borrow, This is how much leverage I can take. But when you start looking at SMEs have different types of risk. And when we looked at that risk profile of each of the SMEs, we tried to create a product that was Sharia compliant and supported both the company and the SME. And it came back to this shared risk aspect. And when you look at the products that we offer, they're not dissimilar to what's offered in the US. So if you look at a company like Square, offering merchant cash advance type financing, if you dissect it to a certain level, it is the purest form of Sharia compliant financing that you can have, because you're looking at taking a percentage of sales, good or bad, right? So Square is not obviously a Sharia compliant company, but the product that was created and this merchant cash advance product fits into the pillars of Islamic finance, because there is this shared risk, because you're not taking a fixed payment every month. You are participating in the company's good times and bad times, right? So as companies or these smaller institutions and SMEs try to get funding, they're stuck in a more historical fixed monthly payment solution that doesn't necessarily fit what they need. And the way we're doing it is through their payment processors, taking a percentage of their sales. And if your sales are good in this month, we'll maybe collect a little more money. If your sales are slower in that month, we'll collect a little less money. And it matches perfectly to their cash flow needs. And we don't take too much cash in the months that they are short cash. We take a little more when we have extra access to liquidity. So it makes it a very good product for SMEs in the market. The kingdom is growing significantly, and the SMEs are at the forefront of the growth within the kingdom under the Saudi 2030 vision.
Yeah. Very interesting. Really, really, in many ways, actually, kind of innovative. Actually, when you think about from again, we're going to use more conventional terms, typical kind of a loan product, but here it's really not a loan product, of course, and that's that's the key. But in the sense that because it's fluctuating based on sales volume, low or high, how do you ensure that that the full value and the risk sharing is properly reflected at the end term, if there is an end term?
So at the end term of the facility, what will end up happening is if they pay off early, we get paid back faster. If it goes past the term of the loan, we usually roll over the loan and continue taking payments until we get paid back. So again, it's the shared risk of if the rate is 7-8% of return that you're looking for on the financing that you're providing. If they pay back faster, the return is a little higher, but that means the company was doing much better as far as sales performance. And if it goes past that point, it goes lower because of the time it took to pay past the duration of the facility.
Now, I want to talk a little bit about kind of the specific nature, because I think depending on where you are in the different parts of the world, SMEs can mean very different things. In Europe, SMEs are actually pretty sizable legacy family businesses. But here in this context, are we talking about essentially, let's say, immigrants from India, Pakistan, North Africa, and setting up shop? Or are we talking about kind of pretty large, sizable, construction, civil engineering types of companies that are, having pretty good, decent revenue?
So from our perspective, obviously the market is vast, but from our perspective, we're more focused on the micro to the smallest of the small size SMEs. So we're looking at a range of anywhere between 500,000 rial or 375,000 rials, which is about $100,000 of total revenue, all the way up to about $4 million of total revenue. Mm-hmm. Obviously, the SME landscape is much bigger, but we're focusing on the smaller the smaller transactions, smaller companies. Most of these companies are sole proprietorships that have been launched maybe within the last 2 to 3 years. And again, they don't have the structure to run proper financial statements, etc. So we don't require any of this information. We basically do a cash flow analysis to see whether or not, based on the cash flow that's coming into your business through your point of sale transactions, are you able to pay us back? We don't want to overburden them with paperwork, excess paperwork that really doesn't have any function of other than just checking a box.
So I wish we had more time so I can go into some of the immigration aspects and some of the policy aspects, but let's cover the area that you kind of briefly mentioned in the beginning, which is around in the context of the country of Saudi Arabia. There is big plans, Vision 2030, and of course it continues to get refined and revised. How does the SME play into these kind of bigger, loftier visions of new city centers, very large kind of new growth centers?
Yeah, while the government is taking the lead in a lot of these bigger projects, the support is all coming from the SMEs that are in the marketplace, whether it's supporting the families that are coming here to build these cities, the infrastructure required, whether you need to set up subsidies to support the bigger cities or smaller cities. So these SMEs, and I've traveled extensively through Saudi Arabia, you see these smaller villages as well. They are all contributing to the vision of employment, right? So part of it is getting more Saudis employed in the private sector. They're obviously the small to medium-sized businesses are the largest employers, or will be the largest employers of Saudis in this market. And that employment also then trickles into these larger scale projects, because all of the country is supporting these types of projects for the growth. And SMEs will have a vital role. They'll be putting their restaurants, their hotels, etc., pharmacies in these areas where they need to be, and it'll be very helpful. Obviously, even from a housing perspective, housing will need to be in that sense in those areas as well. And financing and Sharia compliant financing per se will also play a major role as the government issues sukuks, which are government with Sharia compliant government backed securitizations. For everyone that's watching your show, it's similar to a securitization, but it's a Sharia compliant type of structure that they offer into the market.
Amazing. And again, I think there's some kind of like your career history of going through some major historical milestones here. Again, in the context of Saudi Arabia, there's some pretty big mega trends that's happening. And certainly we see that with the oil and gas aspects. We see that from a transition away from carbon emitting to carbon neutral and maybe even carbon negative at some point. So big changes, a huge implication to the country and that region. And of course, oil and gas has been a big subsidy to the citizens as well as immigrants that live there. So the transition and the ability for Saudis to create new jobs for themselves and others and rely less on the government, whether it's in form of subsidies or direct employment with some sort of government agency, is hugely critical. Can you talk about the role of SMEs and also the financing aspects in terms of supporting sustainable endeavors?
Don't forget to visit astorperkins.com to register for our next quarterly events. Past and current speakers include Damian Vaughn, former NFL player, Neil Gregory, Chief Thought Leadership Officer at the IFC World Bank, and many more. To register, visit astorperkins.com and click on Events.
Yeah, so as sustainable endeavors are getting more and more brought to the forefront in Saudi, and the government has done a amazing job in the fact that they've been able to put more people through entrepreneurship programs, show them the ability that they've been able to create a infrastructure or a society that supports entrepreneurs. When you look at entrepreneurs as a whole, you have to remember that 70% of the country is under the age of 30. A lot of the younger Saudis too have been educated both here in the country, but also have now international education experience from the US, Australia, and the UK. And they've brought all this knowledge back to Saudi Arabia to support this the vision. And when you look at NEOM and the Red Sea Project and Qiddiya, all of these have to be in a level or a way of being sustainable. And also when you look at the projects on the Red Sea, a lot of it is related to renewable energy, etc. So they're definitely making a huge effort, and it's making a huge impact on what's going on here in Saudi Arabia to grow the economy and support the vast employment opportunities that are shown to each of the citizens of Saudi Arabia.
Now, at the timing of this recording, there is a TED event that's happening, TED, and there was a clip of a moderator, let's say, being very vocal about some of the oil and gas representatives on the panel. Can you talk a little bit about how the kingdom, as well as just the general GCC region, is really starting to pivot away from oil and gas? And they're seeing that really the future of its citizens and the country has to rely on something that's much more sustainable, like we mentioned solar PV, but also hydrogen, as well as transport of hydrogen products.
Yeah, I think they're looking at it in many different facets. Obviously, you guys see what's being reported in the news of the growth with these futuristic cities, and eventually all of this will come to fruition. And when that happens, the growth of the country and the support, they're looking at definitely major tourist destinations on the west and east coast of Saudi Arabia. They have opened up the entertainment sector per se. In the next, I think 5 days, what they call Riyadh season will open up, where they have a lot of entertainers coming from the west, different types of events taking place here in Riyadh. Obviously, during the wintertime, it's much easier to get things done. Summers are very hot in Riyadh, but they're really opening up Saudi Arabia, and you see it in every citizen and every person in the country that they are working towards one goal and a similar goal in mind to support this country and nation for a much longer term and into the future. By doing what you're saying of moving away from oil and gas. Obviously, oil and gas are still playing a major role in funding some of these investments, but it's really amazing to see it firsthand. 10 years ago, probably I would never have thought that it would get to this level, but it's really amazing what they've been able to accomplish in such a short amount of time.
Amazing, absolutely amazing. And I think it's very encouraging to hear, and certainly for someone who's really seen both sides of the Western, as well as having lived and lead an organization within Riyadh, Saudi Arabia, the kind of transformation that you're seeing. So again, you're truly living through history. And with that, I have been joined by Paul Mellotto, who is the CEO of AlRaedah Finance. Thank you for joining today.
Thank you, Scott. It was a pleasure.
If you've enjoyed this episode, take a moment to rate our show on any podcast platform that you listen to. Scroll down to the bottom and push 5 stars. It's that easy. And as always, thanks for listening.